Good afternoon. My name is Meghna and I'm a volunteer with iSpirit. We at Sehmati and iSpirit are excited to invite and welcome each of you to the closed user session of the Account Aggregator ecosystem. This event and this gathering in itself is an important milestone in India's journey to empower her people with their data. Over the next hour, we will understand, demonstrate, and begin to scale for 1 billion the account aggregator model, India's unique infrastructure to help individuals and small businesses to take control of how their financial data will be used. I welcome today's speakers. I want to take a moment and actually take in every one of you who are here with us today. You have each played a critical role in bringing the account aggregator model to life over the last 4 years. As members of the government, regulators, technology public infrastructure providers, market leaders, and service providers, you represent the collective power of solutions to complex societal problems when you come together with visionary purpose as you've done today. It is inspiring to have you with us. Welcome. Nandan, I invite you formally as Mr. Nandan Nilekani, Chairman of UIDAI, to take the stage.
It's great to be here. Yeah, so it's great to be here with all of you. I think we do this every 2-3 years. I remember 3 years back meeting and launching UPI like this, and then it took off. And this, I think, is an equally seminal moment in India's financial architecture. I think what stands out, if you look at the journey of the last decade, what stands out in India is the concept of digital public goods, that we think that there is a class of population scale infrastructure that we need in the country, that should be really created as a public good, created by governments and other bodies, and it should be at population scale, so 1 billion people can leverage that public good, and that innovation must happen on top of the public good. So, so that's what we have been trying to do. So, whether it's through the Aadhaar authentication, eKYC, to dramatically reduce cost of customer acquisition, the UPI, which is almost touching 1 billion payments a month, which is really creating a very low-cost payment rail for digital transactions, and so on, and GSTN, which I'm sure Prakash will talk about. I think the account aggregator is in that spirit of creating a national population scale infrastructure, and it's also seminal because it is designed at scale, so it's designed for 1 billion people. It's designed for both individuals as well as for small businesses. And historically, we have thought of data as being best leveraged by large companies that accumulate data or by governments that accumulate data. But here, this is about empowering individuals to have access to their own data at scale. And that's really the power of the idea. And we think this is the first implementation of this anywhere in the world. I mean, people have talked about doing this in other countries, but nobody's actually done it. And nobody's actually done it at the scale that India will do it. So I think this is, again, one more path-breaking achievement from India, thanks to all of us working as a team. Also, while today's focus is on the financial sector because of the leadership of the financial sector, the architecture of this is actually industry agnostic. So while this architecture will be operated in the financial sector now, over time the same architecture can be used for health information. So you can get your own health records from here and give to somebody else. It can apply to your skills. It can apply to your education. So really we have created infrastructure which can cut across domains. But we will today focus on its application in the financial sector. So the thing that we realized, as I said, is that how do we make people leverage their own data? Because we have been saying for some time now that Indians are going to be data rich before they're economically rich. We know that when the West brought in computers and digitization or the internet last 20 years, they were already economically rich. And because they were economically rich, data became a way to sell to them. So you could sell ads to them, and that's how we saw these big revenues from advertising and so on. But Indians are going to be data rich before they are economically well off. In other words, somebody in India, in Bihar, is using a smartphone, his or her digital footprint is as comprehensive as that of a person in Boston using a smartphone. If you have a small business in India which is using an accounting package, which is filing its GST returns, which is paying its income tax, which is taking digital payments, their digital footprint is as exhaustive, as rich as somebody who runs a store in San Francisco. However, the individuals and the companies here are not at the same income level. So the whole idea of what we are trying to do here, and Sudarshan was part of that, Sudarshan Sen was closely involved when we worked with him at the RBI, is how do we get people to use their own data to advance their lives? How can they use their data to get better healthcare, better education, better loans, and so on? And therefore, this model that we have suits a country where people have data but haven't got the benefits of the data, and therefore, if they have access to their own data, they can use it for the future. So in the account aggregator design, and maybe I'll walk around, yeah, if that's okay with you. So this is the broad sort of architecture of this. At one end, we have sources of data, which in the parlance of this is called as financial information providers. In other words, they have data on businesses or individuals, could be banks, mutual funds, insurance providers, and tax and the GST platform. And these are very important because they have data which is digitally there, which is either about individuals or businesses. And on the other side, we have what we're calling as financial information users. And they could be lenders, they could be finance management tools, wealth management tools, robo-advisors. This is up to the innovation of people to think about different ways to do that. But we think over time, more and more solutions will come. And we have individuals or small businesses who want to take the data, unlock it from these sources, and give it under very structured conditions with their own consent to these users. That's the whole idea. Now, what's important is that this brings together multiple concepts. The first concept is how do we create an electronic consent? How do we have a strong way of saying this person is the person and this person is requesting for his or own data? And for that, there is a whole thing called electronic consent artifact. And the credit for that goes to METI. And Ajay is here. Ajay is the secretary. Just stand up and introduce yourself. Ajay is the secretary of the Ministry of IT, and they have been at the forefront of many of these things, as you know, many of the technology. But electronic consent artifact was launched by METI about, I think, three and a half years back. And that allows individuals and businesses to ask for the data in an authenticated manner so that you know that it's, so this is a very important piece of that. And you can do that using ID or whatever, but we can do all that. Now, the other big development which happened at the level of the financial regulators was the concept of account aggregator. And account aggregator is a concept that was actually conceived by the RBI and other financial regulators. And the good news was that the account aggregator concept was done at the level of the FSDC, the Financial FSDC Council, where all the regulators sit together. So the power of this idea is that if the account aggregator framework has been approved at the level of FSDC, then all the regulators are going to use it. So today, it will be used by RBI, it will be used by SEBI, and Madhavi is here. IRDA and PFRD. So in one stroke, all financial regulators will use that. That's the power of this leapfrog. And when we went to, I remember we had a meeting as iSpirit with the RBI. At that time, Raghu was there and Mr. Vishwanathan was there and so on. And we talked about the need to create this data empowerment. How do we empower? And the idea came from Mr. Vishwanathan. He said, why don't we use the account aggregator framework? We said, we had not even heard of that at that time. And he put this idea to us and he said, it's approved at the FSDC level, so we'll get automatically all 4 regulators. So he was the person who really brought us onto this thing. And then, therefore, later on, working with the regulators and essentially taking a concept but making it more digital in some senses, the value add that iSpirit did. And so this is now a approved category of account aggregators. So account aggregators are regulated entities. So they are it's a form of a NBFC, and therefore they get regulated and they get approval to operate from RBI. RBI is the operating regulator for this concept. So when they do it, it applies to all the 4 regulators. And already I think 7 firms, I think many of them are here, have already got in principle approval for being account aggregators. Already the ship has left. Now the way it works is that I, as a consumer, I could be an individual or a small business, request the account aggregator to get my, say, banking data or my GST data and give it to a lender, as a simple example. The good news is this is all done through APIs. So there is no screen scraping and give me your password, all that, none of that stuff. It's all based on APIs. And the account aggregator by regulation does not see the data. This is very important. It is taking encrypted data from here to here. So they cannot see the data, they cannot leverage the data in any way. And therefore the account aggregator is incentive aligned with the user. Unlike in the internet world where they're collecting data about you, the account aggregator by regulation can only pass data and he has to make money from transactions or whatever. And so there is the flow of data like this from here to here. And the other important thing is the electronic consent. And again, India is the only country in the world where the electronic consent is a programmable consent. You can say, I will give you this data, but you can use it only once. Or you can say, this data expires in 1 week. So you can actually, on your consent, you can put stipulations which apply to the user of this. So it's very sophisticated in not only the fact that we have a consent architecture, we have a way of defining the consent in a programmable way. And this is designed for 1 billion people. So 1 billion people can use this infrastructure. It can be used by all the 11 million businesses who are there in GST and so on. So this is real-time consented sharing of financial information. And later on, you'll hear from my friend Prakash Kumar, the CEO of GSTN, on how GSTN hopes to participate in this. And I think many of all our banks are here, and I think Mr. Rajesh Kumar and others will speak about it. So everybody will join, and a bank will both be a user as well as a provider. So if a bank wants to give a loan, it's a user. If on the other hand, a consumer wants to get some data from a bank, he's a provider. And ultimately, more and more financial information providers will plug into this using standard APIs. So now you may get the GST data, which is indirect tax. You may get tomorrow, you may get the income tax data, which is direct tax. Day after tomorrow, you may get the MCA data. So over time, you will plug in more and more of these providers. So richer and richer data possibilities emerge, which I can then share with whatever user I have. Similarly, it could be other. For example, there's a whole business of first-time mobile users getting credit based on their mobile usage pattern or their recharge pattern. So the TRAI will then have the telecom guys giving data into this. So this is really going to become it's extendable on this side with newer and newer providers. It's extendable on this side with newer and newer users. And you will have multiple account aggregators competing in the market. under a regulated umbrella of the FSDC. So it's really a very elegant solution, but the solution has come about because of government, regulators, technology, public interest technology people, banks, data providers, all working together to create this thing. So it took us several years to put all this together, but today we have it, and I think there's a demo planned later on. As I said, the account aggregator cannot read your data, cannot resell your data. So the account aggregator is fully aligned incentives with the user, be it an individual or be it a business. And an example of this, you have a small business. So Mohan wants to get a loan. He can demand his GST returns from the GSTN, his bank account data from his bank, his home loan repayment record from his HFC, and he can share that with the lender or a set of lenders, and the lenders will then use that data and make a judgment of whether he is eligible for a loan, and maybe even give him the loan decision in real time. And this can be done at scale. And the good news is that as India's AI and deep learning and all these techniques improve, they will use AI and machine learning and deep learning to judge whether he is a good credit risk. So suddenly, we now have an architecture which will work at scale using rich data and well-trained data models to enable banks and others to make credit decisions. And this is going to go to people who so far may not have been in the credit cycle because of knowledge asymmetry. So this removes the knowledge asymmetry between small companies and individuals and enables them to participate in the formal financial system. So the next cycle of growth can actually be driven by rapid adoption of this. And because it is very richly data-based, it is actually, and you'll have machine learning and all that, you'll actually have much better underwriting and risk management here than we have had in the past. So it'll actually allow you to scale without all the risks of doing that. And the other important thing is that this lending is not based on assets. Historically, lending is based on assets. You submit your balance sheet and your collateral. This lending is based on flow, on invoices, on payments, on receipts. So flow-based lending, which means companies and individuals who are not yet in the formal economy can use their income to get a loan. And this is how we are going to have financial inclusion, because you don't have to have any assets to get a loan here. You have to show that you have business, and that business is, you're selling things and getting money back. And therefore, we think this has a massive role in financial inclusion, so that millions of small businesses that were not in the financial system can now get access to finance. And that is also the reason why they will join the formal economy. There's this whole theory that small business doesn't want to be in the formal economy because they don't want to pay taxes and this and that. But the reality is that once they join this, the benefit to them of joining the formal economy, which will be access to credit at an affordable price, becomes the incentive for them to join the system. And therefore, more companies will join, make sure they file their GST returns and become part of GST, because they know that they can now use that invoice details to get loans. So I think this is creating a virtuous cycle of formalization, where the incentive to formalize is not that you better join or else kind of thing, but actually because you have a way of now accessing credit and other things from the formal economy. And so we think this will create a virtuous cycle, and therefore this has huge potential going forward. And of course, as the quality of data improves, you will have much better improvement in understanding the risk. So I think it will all help in this whole NPA stuff. And most of the world's conversations today are defensive. How to protect users from somebody misusing the data. So the GDPR in Europe is all about how to protect users and so on. Here we are taking a different view. It's not about just protection, which we will have. It's very well protected because your data is encrypted, signed, can only be with your consent, etc. It is how can we use data to empower users. And this is the important thing, the inversion to data as empowerment. Well, that's why this whole thing is a data empowerment architecture. And parts of this are being done. For example, in Europe, PSD2, some part of it is about this. In UK, open banking is part of this. There's some mention of doing this in the Dodd-Frank Act in the US. But nowhere in the world there's a complete